Well, I'm so excited. Thursday, November 9th. Here we are, Rivet Real Estate, Bree, Roger, and Rosie, bringing to you live, discussing everything that's happening in the real estate market. Now, full disclosure, you might not get this news anywhere else,
Yeah.
but here. So we're going to do our best to make this real estate conversation as fun and alive as possible. And we only have one intent. My intent is that you are better educated because you are related to us. You are better decision makers in the real estate market because we are leading that decision with you. So without any further ado, Roger has spent like, Bree, did it take a lot of hard work on our part to drag Roger into this conversation? Like, he was always talking in our ear. All the time.
No.
Whisper. What do we call it? Secret whisper? What is that?
Dog whisperer.
For you to be the whisperer, dog whisperer, then we have a dog.
Rough. I'm just kidding.
I'm not saying that. My lips are sealed.
You imply, you don't say.
No,
Okay.
because there's actually a show, The Dog Whisperer.
Yeah.
I like the whisperer part better. So he was whispering in our ears all the time, all the information, and we were going out and discussing it with our people. And we were like, hey, you need to be on the webinars with us because people need to see who Roger really is in the back end. So guys, Roger, you just got a compliment from one of our attendees. Hi,
Oh.
Indonesian man, McCann. Oh, I know why.
I love it.
That's cool.
Must be
Hi,
Portia.
Varun. Good to see you. Good to see you, brother. Thank you for joining us.
Wow, man, I figured out how to look at the names and stuff. All right, so perfect. Let's go ahead and get started. Get started on today. Super excited. Happy to have you guys again. I know a lot of y'all watch it later, and if you are watching us and hearing us while driving, we want to make sure it's fun, entertaining, and we be real together. Yeah. All right, so without any further ado, I'm going to share the news that's happening. Now, please know, Roger is a commercial broker on our team, and a lot of his work on our business is actually guiding the investment world, right? He comes from commercial world, and as detached people make commercial and residential, it is not. What happens in commercial world, what decisions are led in the commercial, are leading commercial decisions is right away having an impact on residential. And today we're going to prove it to you. Yeah. All right, sounds good. Let's go ahead and let me open up my news because I want to make sure, I don't play Roger here. You know, those moments when you're super prepared and then the document just like disappears?
Yeah.
Oh, yeah.
That's me.
That happens all the time.
I'm good with information, just organizing sometimes,
All right. Well, now Roger was bringing, like every week, he spends good 5 to 6 hours studying the market, understanding the market, and reading the market. And then we just shortcut everything from him and run with the decision with our people. So Roger, when you were talking about this week that urban doom loop for downtowns, this expert isn't buying it. And here is what the data says. Like, what were you wanting us to understand from this?
All right. So what I want to bring here is that there's this researcher from the University of Toronto, and she tracked cell phone usage and the downtowns because there's been this conversation, and even in our previous episodes, we spoke about a migration shift and how people are moving more to the outskirts. And so naturally, if you can create a void in one area, we want to wonder, is that area going to bounce back? And is there an opportunity in that area? Are prices going to go back up in that area, especially a vital area like a downtown, right? So we all saw what happened during COVID. Our downtowns were empty. The streets, nobody was on them. The restaurants were closed. And so there was this huge vacuum. And people had resorted to going back to their home offices. And so even now in our latest migration patterns, we've noticed that the outlying communities are growing. So this researcher did some really, made some really good observations. And she said, you know what, we're at 74% of our pre-pandemic levels. And if you'll scroll down, it'll show us the cities. And I've highlighted where San Antonio, Austin, Dallas, and Houston are. And so
Basically, you're saying that people are back to their, walkability, like they're back out and about, occupancy, and restaurants, bars are at their 74% than pre-pandemic.
yeah, see if you can make it to where it's single page. I know right now we're looking at 2 pages. I don't know if you can make it to where you can view a single page on there.
Yeah.
Yeah, single
Great.
page. So what I was really impressed, or where my mind started wandering off to, was, okay, if Las Vegas, which is a super walkable city, is 103% of our pre-pandemic level, and then we have San Antonio, which is the River Walk, and Austin down below. What I'm feeling like is right now is the time to move into these areas. Right now is the time to move into a downtown Austin property, because we start seeing a trend that things have gone back to pre-pandemic levels. Like if we look at the top of the list, that's at 103%. Las Vegas is at 103%. So that should be a signal to us that perhaps people are feeling more comfortable going back to those more congested areas. Like Brittany just came back from her trip to Vegas, right? And Brittany, is probably people didn't mind sharing their space or being in a crowded area, right?
What was your experience, Brie? You're muted. You're muted. I want to hear your invisible voice, but
There we go. There were so many people. I mean, so many people walking around, so many people in the restaurants. I was at the convention, so many people there. People were all together. I mean,
anybody wearing
Nobody was
masks?
worried about masks or anything?
we probably saw less than 5% of people wearing masks. There were a few, but
Okay. And those could be health conditions too, people just generally do it. Now,
yeah.
if you look at, there's a common pattern between the cities that have acquired above 80%, like
Mhm.
Los Angeles, Nashville, Tennessee, Music City, Miami, San Jose, Bakersfield, California. Like these are the places that Tampa, Florida, like these are the places that are known for the foot activity, right? So I would say, us in Texas, Austin, Texas at 72%, Dallas right behind it, San Antonio already there, and Houston is always catching up. Okay, great. So it sounds like we are getting, so basically what you're saying is that don't shy away
Don't shy away.
from making a decision, right? Like the financials, what was the Dallas Fort Worth news here about Charles Schwab?
Okay, so this is Charles Schwab. They're currently cutting their workforce, and they had a huge presence in California. They were headquartered in California, and so they're laying off about 5 to 6% of their labor. And this is not good news, but as we always say, we're going to bring you good news and bad news.
Yeah.
Now, they are closing their downtown San Francisco property on December 1st.
Mhm.
And the leaders in the company have come on and said that Dallas, which is their new headquarter, will remain a substantial place for them. Like, that's not where they're really
So
looking to.
layoffs really won't happen in Dallas.
Yeah, I
as
think
much
the
as-
cuts are coming
Okay.
in more struggling markets,
Yeah.
if you will.
Yeah. Yeah, that makes sense, actually.
So you're going to hear the news. Our people are going to hear the news, and they're going to say Charles Schwab is cutting jobs. And
Yeah.
so our first train of thought is thinking, well, they're headquartered out of Dallas, so Dallas must not be doing so well. But I would say that with their cuts, they may be quite a bit centered around their San Francisco, their previous headquarter closing down. So look into it a little bit more before you make that decision.
Okay. Now, I know there was also a discussion, Roger, like we're small business owners, right? Our family is a small business owner. We know a ton of small business owners that we work as clients. So what is your observation on like JP Morgan's take on hiring new business bankers? Like where are they headed with it?
Yeah. So we're talking about banks right now. And I think reason why banks are so important for us to talk about is because that's where all the money is. And we're talking about the lack of liquidity in our markets. And right now, JP Morgan is going to increase their business bankers. They were going to hire 500 new bankers. They're hiring 1,000 more bankers. And this is good news to the Dallas market because it's not highlighted there. But
Yeah.
1,000 new bankers will enable the bank to serve well over 100,000 clients.
Yeah.
And the DFW area, right? So DFW currently serves 234 small businesses.
Yeah.
And JP Morgan, he said something really interesting, Jamie Dimon. He was asked this question. The Fed recently decided to hold interest rates steady. Some people are hoping interest rates come down next year. What does the latest decision mean for small businesses? And his response to that was, I always caution people who are rooting for the Fed to start cutting rates, because usually the Fed starts cutting rates when the economy gets weaker. The reason rates are
Wow.
high right now is because the economy is good. It's strong across the board. Consumers and small businesses are still relatively in good shape. And if the Fed starts slashing rates, that means a lot of people are losing their jobs. So I think that's a false premise, and I really like that. So I had to share it with you guys that what
Let's speak on
everybody's
that a little bit. Yeah, let's speak on that because Roger, we bought our first property when the interest rates were 7.75. We saw them go down to 3.25, and we've closed properties for people at like 2.99 interest rate, right? 2.75. Some people at 1.5, free money, right? So let's talk about it. Like for all those people who are hoping that the banks cut down rate, what does it mean for economy? Like, how does banks' interest rates, mortgage interest rates, reflect on the economy we are living? Like right now, we're 8% interest rates. Bree, are people buying houses?
Yep.
Are people selling houses?
Yep.
The only thing different is the competition and the price. People are still making decisions. Now, it's not that prices have dropped down 40%, 50%. They've gone down 10%, but people were paying 10% over. So losing 10% is basically still a stabilized market.
Yeah.
But the interest rates have doubled. And if our people are still able to afford housing, that means people have revenue and income enough to support that interest rate. So what you're saying is, Roger, that banks are making it clear that if we are dropping interest rates, that means we're having to drop interest rates so we can encourage people to buy, which happened exactly in 2010, 11, and 12. I remember when Obama administration took over, the very first thing they did is drop the interest rate to encourage people to buy again.
Yeah.
And that was a byproduct of like a bad economy that they were trying to recover.
Mm-hmm.
Right? So could we say that we have high interest rate, which means we have stabilized economy right now?
Absolutely.
Wow. Okay.
Yeah.
What is this like? Tell me
Okay,
about
so
new company.
we're leading into this news for a reason,
Okay.
because all those interest rates are really high, right?
Mm-hmm.
There's these large funds and these big business people. What they're doing is they're going out and they're accumulating and acquiring property right now. So I
Yeah.
love what this guy says. I'll read the quote later on down the line, but he's the owner of the Phoenix Suns. And he
Okay.
made the largest purchase in office space this year so far, buying a $580 million State Farm building in Dallas. And he also bought
Wow.
something off of Post Oak. And I know, Rune, I saw your photo where you're at the Post Oak Hotel. So he bought some offices in the Post Oak area. And he says something really, I think, motivating. It was to me. He says employers are hiring, and at some point, the office market will be okay. Even if the utilization of office space has gone down, employee count is going up, right? So
Mm-hmm.
I think what's happening is, again, we got to think of the vacuum effect. The more that we have these companies moving out of the office space, and no one's gonna be building office space, right? So start looking at the assets that are not being developed right now. The last thing to be developed is office space. We are having some really big names. You're still having some really aggressive business people out there develop office space, but maybe not like before, right? It's at the bottom of our asset class list.
They're saying office and retail is hurting the most.
Yeah, and I would love to share that that screen I shared something earlier with you where I had taken a screenshot from Deloitte. Deloitte had done some research about where the best place to invest was right now. And if you have it,
Yeah.
I believe I slacked it to you, but
Yeah.
it's yeah, if you can pull it up, fine. Otherwise,
When I pull it up, something else gets pulled up, and I'm trying
okay,
now. Let me see.
no worries, no worries.
Yeah, keep going. And you were saying?
Okay, so so this gentleman who's buying this property, he's got a really aggressive outlook, and he's buying millions of square feet of this stuff. And so I feel like if the economy continues to get strong and hiring goes up, naturally that office space is gonna be utilized. And one, does everybody follow what I'm saying?
And a
Oh,
lot,
Yeah.
just so y'all know, a lot of people are, a lot of businesses are going back to the office. They're saying hybrid, but hybrid
yeah,
means you have to be in the office 3 to 4 days a week. That's what's happening
yeah.
with my husband's company. They're having
Ah,
to go in 3 days a week. They're talking about a 4 day a week work week. And some people are leaving that job, but they're running into the same problems, right? I know
yeah.
people that have left there, and the new companies that they're getting hired at, they're requiring 3 days a week. So I think eventually, they talk about work from home, work from home, work from home, but a lot of companies are starting to implement more of the hybrid and going into the office 3 to 4 days a week.
Yeah. And I
Absolutely.
think there has been a lot of conversation in office industry about productivity. Like people are enjoying working from home, convenience is great, but there is something about being in a social environment, you know? I remember studying this research. There was an article from Harvard that said, if you are sitting in proximity of a highly producing member of the team, the average productivity of the team went up by 300%.
Wow.
Like, isn't it true? Like, we just do more around people who are doing more,
Yeah.
right? Like, when people are home, some people need that leadership so that they're able to perform more by other people's influence. So,
Yeah.
unless and I think companies are at some point going to say that, hey, productivity is more important than convenience.
Yeah.
So,
Yeah.
I can cut the cost of office space, I can cut the cost of, paying for commute and per diems. But if it's compromising the productivity of the company, then they're going to want to reserve X amount of office space. And office space is not going to be like where you can acquire the space for 4 days and then they can acquire it to some other company. You have to buy the office space.
And I think a lot of these people are long-term plays too, right? They're thinking 10 years down the line. 10 years down the line, the new workforce that's coming in, it may not be that big of a memory for them because they were maybe 10 or 15 when this happened, and it wasn't really, it's a bigger deal for the parents because they're going through it. They're wondering how do they provide for their families. But the new workforce, the 20 to 25-year-old workforce that's going to come in right out of college, it may not be as fresh on their minds. And
Yeah.
getting to collaborate, eventually we're going to have a generation that hasn't experienced COVID.
Yeah,
Yeah.
there are efficiencies that came out of it that were, I don't think it's ever going to be pre-pandemic level the same because we have modified ways of doing things. Like I remember in our world, people were not okay with a Zoom call. They wanted to meet face to face.
Yeah.
Now, if they have a trust in a relationship, they want to be able to just meet on a Zoom call and have a one consultation rather than like having somebody come over and look at their property or make a decision. I think their efficiency part would not go away, but the social part of it would cause people to come back. Now,
So
Roger,
guys,
what
this
did you
chart
mean by
right here,
this?
yeah,
Yeah.
so this is risk adjusted opportunity. And so they're saying that because of the valuations that have the prices that have come down from single family homes, that people probably would be better off investing in single family because risk adjusted, it's a great place to park your money.
Yeah.
And digital economy is actually data centers.
Yeah.
So I have some really good news on data centers and the Hill Country region. We have some really big data centers coming in. So once we move back to the previous slide, we can talk about that some more.
You know, we used to talk about data centers back in 2013. And I just want to add in here today that one of the reasons Austin was considered a great city or great area for data centers, like I worked for data centers, Oracle was somebody I worked with, and good environment and something that can prevent hurricanes or adverse climate is very favorable to construction of data centers. And Austin is one. Like, we don't have hurricanes like Harvey in Houston, and we don't really experience flooding like other parts of the town does. And our proximity is closer. Our temperature is not that adverse because of the lakes and hill country environment. So data centers are very favorable. And
Yeah.
construction of data centers is very favorable. So hence our company is very favorable. So I
Yeah.
think real estate is regional.
Yeah.
Economy is national.
So Portland, there's we'll get to the slide. If we get to the slide, that's fine. I might be a little ways down, so I'll just jump to it now. But there's a data center coming into the Hutto area, Pflugerville-Hutto area. And I believe it's going to be 3 million plus square feet of space.
3 million plus?
3 million plus. Yeah, it's like 3.6 or 3.9 million. And the one that's bigger than that, which is at 4 million something. So this will be the second largest. No, you can go back up, Rosie. It's fine. We're going to get to it, but this next, no, go down. This next piece of news is really good too. So I think it's really important to see. Last week we talked about how people were not spending their money. They're actually spending their money on lattes, like, Starbucks reported a great quarter, right? So we all love our lattes, pumpkin spice latte. And so now they're saying that.
By the way, he's never ordered one. I can tell you because I'm married to him.
I'm about to go get one today. I want to see what the hype is about.
Yeah, let's do it today.
I haven't had one. I've never had one, so it'd be a great time to see that. I think the weather's perfect. It's a great time to have.
Let's contribute to that orange line.
Yeah, exactly. So just real quick, people are spending more on holiday gifts this year, and that's just a testimony to how the economy is strong.
So that's why 8% interest rate is okay, and that's why going to Vegas is okay.
Yeah.
And pumpkin spice lattes are pumping up the red line. Hello there.
Yeah.
Okay, so Central Texas leads the state for retail rent growth. Hello, we have an office, by the way, guys. We have a commercial place for sale that is perfect for retail. And I will tell you this, by little effort that we were making in marketing, we're starting to get calls. People are looking for expansion. They don't want to rent. They want to own if they can, because rent was very high. So can you speak on this, Roger? Like, where is the retail rent going?
So retail rent in Austin, we're seeing is higher. And this I think follows the reason why I wanted to mention this is because if you talked about retail, I remember sitting at a restaurant having a coffee with somebody, and Amazon had just kind of disrupted all of the retail industry. And so there was a really pessimistic viewpoint on retail. So we said, you know what? No one's going to want retail anymore. And so what happens is when we start pulling back from these asset classes, like right now, multifamily is one of those places, right? Because we have, get this is breaking news, by the way. I know we have breaking news on here, but you can expect, this is a fresh report just posted today, 30 minutes before we came on here. So I didn't have a chance to add it to my report. Actually, like maybe 15 minutes ago, this was just brand new news. We can expect fewer apartments coming in next year.
Fewer?
So there's fewer apartments. 2024.
Wow, that means rents are going to go back up.
They're pulling back. There could be a 26% decline in new apartments, and we developed quite a few. So we're completing 21,000 new units in Austin this year.
Wow. And they're saying the retail rents have grown over 18.3%, which is the 10th fastest growth rate in the US during that time.
So what do you think is going to happen to apartments when we pull back on
I keep talking about this. I keep talking about this with my people. Yesterday, I was talking to one of the investors. I said, you know what? Apartment rents low right now. Like, Bree, are we struggling with like a little bit of lower rents on our investments? Yep. It's taking a little bit longer to rent because there's so much apartment rents that are competing with it. Yeah. Low apartment rents, sometimes I feel like, is a trap. when in the history did the rent drop for apartments? Rarely
When-
ever, right? They might
Yeah.
have stabilized or not increased at the same rate, or the new ones came in and they made it attractive to get the occupancy higher. But when was that? Like, when was the time? When was in history apartments said we're not going to raise interest?
We have so many forces going against, we have lack of liquidity. There's no financing on apartments. There's overbuilding of apartments. So you have a
Yeah.
perfect storm for multifamily, for people are retreating out of that and out of that market.
Industry to
that
ownership
asset
because of
class.
this collapse.
And we're
You
going to
know, Raju,
expect 26% fewer properties coming online.
you know what I'm surprised about? People
Mhm.
are renting because they think rent is cheaper.
Yeah.
Now they're going to keep renting, and next year or year after that, rents are going to go up.
Actually, more
And
people are
if-
going to move here because they're going to say, wow, rent's so great.
Rent is so great, right? And then the houses, the single family interest rates are going to drop, and it's going to become competitive, and prices are going to go higher.
Prices are
And
going to
an
go up.
X amount of people are going to stay trapped in renting forever. It's almost like a little trap to push people out of home ownership. So the builders can now start building to rent. Like, why are builders building to rent? When was the last time they did that? They know selling is not as lucrative as them renting the properties, because once they sell it, a new homeowner acquires the appreciation.
Yeah.
Exactly.
And they want to hold on to that appreciation because building is expensive, you know? So San Antonio, third fastest pace over 12 months, behind Austin and Miami. Wow, wow. So basically
So
you're saying from today, Roger, that can we talk about this real quick before we talk about our investment opportunities?
yeah,
Bree?
so if you are looking in the Del Valley area, we have the Tesla effect, billions of dollars going into the economy. We need workers, we need housing for those workers.
Yeah.
And so we have this project which is a bond funded by the bond, right?
Right
And
here,
it's
yeah.
going into, so this is affordable housing.
Mm-hmm.
And I believe it's going to be about a $70 million project, $70+ million project. So if
Yeah.
you're looking for, this is, affordable housing is needed. So this is good news.
Yeah.
And
They're being affordable because they're getting tax abatement on it, right?
yeah, they're
Yeah.
getting, and it's being, we also have the bond investment that's
Yeah.
going into it.
Wow, rental rates will range from 13, 14 to 2000. What an affordable way to lock people in.
And I was looking at that, actually. You hit the nail on the head. That's actually, I do this research a lot, guys. I actually go around looking at what apartments are renting for, and I go meet the managers on location and stuff like that. And
Mhm.
that's pretty much what the rent is in a lot of places in Austin.
Mhm.
So I don't know, affordability,
that's
maybe.
affordable.
I won't judge them.
Wow.
So we're preserving some of the culture in Austin, which is good news. Rainy Street, they wanted to tear this bar down and they wanted to build a high rise there. That project got denied because they want to preserve Rainy Street, which is just funny to me because there's nothing about Rainy Street that's preserved. It's a tourist vacuum, and everybody flocks to Rainy Street. I remember when I moved to Austin, that wasn't the case. It wasn't that way there. But this is the data center, Rosie.
This skybox. So guys, if you hear about a data center and the word skybox, you heard it from us, Revit Real Estate First.
Yeah.
All right, 63 million, guys. Where
I
are
say
these people going to
63
go?
million, but I think there's a lot more money being spent in that area.
Yeah, what is
And
this land
so-
around that going to do?
So Pflugerville, you know where Living Spaces is?
Yeah, right up on
Yeah,
on
right
32
next door to Living Spaces, they're building a really large data center there.
Oh, wow.
Well, hello there. How big? 148,000 square footage facility.
Yeah, second largest, 3.9 million square feet, second largest data center.
Oh,
Yeah.
there's another one in Hutto, it said.
Yeah, that's the one.
as well. So people who are scared of Hutto market, like, hello, get excited. Bree, all right, bring us some news. What can we buy? Like, from all this cute news about Pre-pandemic activities back, data centers are coming along. Tell us what we can buy.
Awesome. So, okay, I know Roger had spoke about a lot of uh movement is happening in the downtown area, and I don't know about y'all, but I remember the time when you couldn't buy anything in Austin under 400K. Period.
Yeah.
It was like non-existent.
Mhm.
Now I have 3 properties, okay, that are around that under 400K price. This is 415, but we can negotiate, right?
Yeah.
All in Austin, okay? And look at this. This is an Addison, relatively new
Oh
property.
my
So
goodness.
we're not looking
Wow,
at
really
old
cute.
properties.
That's cute.
Look, very modern, chic, looks great. Okay, I'm just kind of going through them relatively quickly, but this is all going to be in the investment sheet that I'm sending out today. But look
Wow.
at this. All right, here's the
Ah,
first one. 25% down. We're positive cash flow, guys. Positive cash flow, positive cash flow. And here's the third one. All 3 of these
Wow.
in Austin proper
Yeah.
are
And
yielding
and
positive.
and Bree, to back you up, like in a low interest rate times, people were putting minimum 10% above asking as a overbidding amount. Can we agree on that?
Minimum. You're not under 400K if we were in, those times. You're at like
Yeah.
400 plus.
Yes, so it could be 15% above asking that they were putting in just to win the bid. Now, if they choose to put that extra 10% cash towards the down payment, hello, you
this is
just became
why
a triple digit cash flow.
this is
Yeah.
why single family risk adjusted is #1 according to Deloitte.
Yeah, well,
Yeah.
point proven. All
Yeah.
Prices
right.
have gone down. Yeah.
So, and same thing, like here's a couple in Pflugerville, and again, 25% down. We're slightly negative, right? This is $8. I mean, come on, guys. Like,
Yeah, but guys, can we agree on Bree?
Hey,
Can we
$8 is your
here's your pumpkin spice latte. Come
pumpkin
on.
spice latte? And hello, we are in the lowest rent right now because of all the multifamily competition. What are we seeing next year? Rents going up. When rents go up, guess whose rent is going to go up? The one who owns the rental.
Exactly. So don't sleep on this, but I want to say just one thing.
Yeah.
Guys, don't forget about Central Texas. Guys, you want something under 300,000? Here you go. Your economy is already built in Temple, right? You have all of the hospitals, you have all of the shopping, everything is built out. You have nothing to worry about with Temple. Your economy is there, right? Your
Yeah.
ecosystem is there. Your
Yeah.
positive cash flow at 25% down under 300.
Yeah.
So rents look good, days on market look good. We're looking at 30 days or less. There are some areas, depending on when it is, 30 to 40 days, but that's just in tune with what's happening within the market right now. Don't worry, properties are
But
getting.
I
And-
love these submarkets. I love these submarkets because they're not going to be the ones where the big builders go to, right? DR Horton just expressed that they went up in revenue, but they went down 16% in profit. I don't think that builders are going to be, they're going to be conservative now. So that's another news that
Yeah.
that builders are going to become more conservative because they're not profiting the same way they used to. And
Yeah,
what
they're
do we
not going
know
to go
from
out and buy
2000
that much land
Yeah.
anymore.
And what do we
because-
know from 2008 was as soon as they lost money, they pulled back on construction.
Yeah.
And so if there's no new homes being built, this could be this could be really temporary.
This could be very temporary. And Bree, kudos to you to finding under 300, like 274. The word two is like a
Yeah.
music to the ears. Like I have never, decades have gone by. Like it was 2013, 14, 15 when I used to hear that. So this is a great sign that builders, and now I do want to bring one thing up here. There has been times, Bree, where you were working with our buyers and they were able to get assumable mortgages. There are times where the current mortgage is assumable, right? So these numbers we're running at is at a higher interest rate, right, Bree? Like at a 7.5%. If you get an assumable mortgage from these people, you don't get what you don't ask.
Yeah.
And our buyers who have asked have gotten assumable mortgages.
Yeah.
So if you have a great W-2, you have a great income, write offers.
Yeah.
No offer is binding until executed. So
Yeah.
if you write offers and you allow yourself to realize the opportunity in the market, you will thank yourself back years later. You would say, good job. you did it when it was
Yeah.
the right time. Or you can have an ouch moment, right? So Bree, I would say to our buyer who is not making a decision over $5,000 when they've already negotiated over $25,000, let's make a phone call and send this PDF to him. I think it's time. All right, cool. Well, Raji, I know you're boiling with 100 other news, and he's our news podcast, forecast, whatever you want to call him. He's our pumpkin spice latte of real estate,
That's so funny, Rosie.
spicing our world up every day. And thank you so much for doing what you do. We truly
you,
get to
guys.
be
Yeah.
like Bree and I get to shine with our people because you're always pouring so much wealth to us, and we can confidently make decisions with our people. Like Bree, I
Yeah.
think so many investments have gone right because we kind of knew what to expect in those
Yeah.
areas, right?
Yeah.
So Roger, thank you so much. We can't wait to
Thank you.
exploit your
guys.
brain next week. And
Yeah,
Bree,
thank you to Brittany for
yes.
all of these cash flowing properties to us.
You know, it's
And
like she gets this bag of like Halloween candy and she just goes in there and knows how to pick the wreath. You know, the wreath buttercups.
Reese's
She's like,
Cups.
I
Reese's.
Yeah.
found it. I found it.
So now we know Rosie's favorite candy, Reese's.
No, I'm allergic to butter. I'm
Curveball.
serious. I don't want anybody to send me Reese's. I'm allergic to peanut
Uh-oh.
butter. But I do know. See, that's what about real estate. It's not about what you like. It's what market.
Ah,
What the
there we
market
go.
likes.
There we go. I
Yeah,
like
and
it.
you know, y'all out there who just denying that you don't like Reese Buttercup, get over yourself. Let's just be real. You like Reese Buttercup. So when it's given to you, just take it. Stop wondering what other candies out there. Reese is still the best.
Actually, you know,
Yeah.
while you're waiting for all the other properties or all the other things to, you know, happen, you could have an appreciating asset.
Yes. While you're
Yeah.
waiting for money to drop, your money can be making money for you.
You know, a lot of people coming on here are probably looking for some drama, right? They're looking for drama. But I'll tell you what, they say success is simple but not easy. So I feel like this is not a drama economy because we have so many big players out there, so many funds raising hundreds of millions of dollars, ready to move into any new possibility. We just showed y'all all the people who are willing to invest in apartments and office space. Like office space is probably the most pessimistic place to be in throughout the whole US. But we have investors that are buying up that space in hot markets because
$580 million invested in office building. My brain just blew up.
yeah, and just a couple of weeks ago we had mentioned Goldman Sachs is opening another headquarter here in Dallas, $500 million. So
Yeah.
people are continue spending money. And I always say this, I said, I got this from one of my best friends, Rama. She says, don't look at the tip of your nose. And I would say that that's probably the best advice I ever received in investing in real estate. So I think all of us are here because we know what it means when people own more real estate. We've seen what it done for all our clients. And that's probably the most rewarding part of this career is to
Don't kick a leg to $25,000 worth of negotiations over a $2,500 disagreement. Like that's plain stupid.
Yeah.
You know. So guys,
I
I
have so much more. I have so much more news.
No, you calm down because no.
They're not going to let me share any more news.
Tune into next week.
Tune into next week. He has a lot more.
more.
We are supposed to keep the time honorable.
And
Otherwise,
you see what changed. You see
can...
what changed. She's in control of the data now, and she shares it because I could share a lot, you know, guys. So if you have,
you know what? How do you eat an elephant? One bite at a time.
So if you have any specific questions, first off, we would love and appreciate any likes, comments, subscribe if you can.
Dislikes.
That's the only way we know we're doing our job, right? So
thumbs up, thumbs down, we take it both.
Yeah.
Yeah, I'm not rhyming today. I don't know what's going on. Hey,
Yeah,
anyways, guys, I love you all. Bree, any lasting words? Anything else that you want everybody to hear?
I would say this, please don't sleep on the Excel sheets that we're sending every week. They
Yes.
have gold, literal wealth given to you on a platter, right? Pick the property you like. Tell me which one you like and we'll negotiate.
Perfect. And you don't get what you don't ask. So go for it. Love you all. Have fun. We'll bring Roger again. If you really want Roger on next call, make sure you like, comment, because
They're gonna kick me off, guys. They're gonna,
he has to earn his time
yeah. We have a
because he did the crime. I'm
we
telling
have
us
an
about him.
unspoken agreement.
All right, guys. Love you all. Thank you so much. This has been a pleasure. And it is our wish and our prayer and our commitment that you continue to grow in real estate because we have committed our life to do that for you. Until then, make it a great day. Bye-bye.
All right, bye guys.